Welcome to Tekedia Daily. I'm Ndubuisi, Ekekwe. Our conversation today will focus on intra-African trade and essentially intra-African remittance, specifically on how to fix it. There has been this extraordinary excitement in the fintech world, how to facilitate the movement of money from people, especially African diaspora living in North America, Europe, Asia, and other parts of the world, indeed, into Africa. And this kind of transfer remains one of the massive opportunities to get necessary capital and fund to drive development across African communities and families. The movement has always been how do you improve that process from Western Europe, North America, especially into African continent. Unfortunately, when you come into the construct of intra-African remittance, you largely see any major advancement in that sector. You are not looking at how fintech banks and other companies in that space are trying to improve, innovate within that specific horizon, how efficiently people can move money from Nigeria to Kenya, Ghana, to Uganda, and all African countries. So, in this conversation, we know that there are benefits because if we can facilitate intra-trade in Africa, it means that we are essentially going to provide opportunities for our people, and then we keep that money right in Africa instead of sending it to Europe or North America. Of course, we know that because of the way the trade routes had been in the past, moving towards the colonial masters, there are perks of exit and perks of entry. We have a lot of things to do to change that. Okay, the African heterogeneous market, because we are not yet knowledge based, we are still raw material, mineral based. There are a lot of heterogeneous natures across the different African economies. So that also a challenge. But there is no denying the fact that more trade, inter-trade in Africa, which sits around 11% today, as a percentage of the total trade in Africa, has to improve. So how do we do that? First thing, the banks, you can move money from Kenya to Nigeria, you move from Benin Republic to Uganda. That's happening. But of course, we understand that it's really very expensive because these banks have to manage the forex risk, foreign exchange conversion risk. It takes sometimes 2, 3 days, and certainly the experience is not awesome. You have to go to the bank, fill paperwork, they send it to their treasury, the central banks move, and at the end of the day, it's just a lot of stress. I propose something so unique and simple. Simply, if you are a fintech or if you're a financial institution, I don't necessarily know how the banks can comply to warehousing cash in different localities around the African continent. So this may not necessarily work for banks because of so many regulatory issues, what they can do with depositors' fund. But if they do this thing and operate it as a separate entity, like a fintech, I think that becomes a possibility. So you're a fintech, you have your global operation anywhere, and then you go to the African countries where you want to do business, and essentially you register and open a business. Then you go open a bank account. Open that bank account, you put cash in the local currency. Let's say for a Nigerian market, you have $100,000, convert it into the Nigerian naira, have it a bank account in Nigeria. You go to Gabon, you go to Kenya, Egypt, Uganda, and other African countries. Now, when people want to move money from Nigeria to Gabon, what do? If somebody is moving from Nigeria to Gabon, you just collect that money from that person in Nigeria. And then if you cannot match anyone in Gabon that would also like to send money from Gabon to Nigeria, you just do one thing. You pay the recipient, the Nigerian person is sending money from the local money, cash you have in Gabon in the bank. And once you do that, you have essentially eliminated the need for any reason for somebody to move money across the border. And once you have done that, it offers you a huge opportunity that You don't have to go through SWIFT. You don't have to go through foreign conversion, exchange conversion. You don't even have to have any money move across the border. And the fee will largely be very, very low because no money has actually moved across the border. And of course, you can execute that transfer in a few hours or even instantaneously, depending on how the banking switching system is configured. So it gives you a lot of advantage. But I also understand that when you start putting money in different African local currency, there are risks associated with loss of value because the currency most times may deteriorate. There's no problem. You could say, okay, I am going to calibrate the fees I charge by compensating for that loss, potential loss in the local currency over the dollar or the euro, where I have actually raised the capital that I converted to store in the local currency. But if you do that, you are actually in a better position to appropriately price the products that you are selling to these customers. You can take a little bit of grace to them. You see, instead of what the banks do, you say, okay, there is risk of maybe, let's say 100%. I am going to absorb 20% because this risk is not certain. So let me pass out the benefits to these customers. So the way you do this is this. You have managed this challenge of a kind of disequilibrium where the number of people or the total cash equivalent of people from Nigeria trying to send money to Gabon and Gabon back to Nigeria may not be at equilibrium. But by doing this, you have essentially solved that problem. And once you do that, you become a great virtuoso system that can provide speed, provide extremely affordable product, and that will help to drive intra-African trade and intra-African remittance. You are listening to Tekedia Daily.